Bitcoin topped 3 weeks and 2 days ago. Back in 2021, Bitcoin peaked. A couple of weeks later, the NASDAQ peaked. S&P, they had it with that itself. Later, the S&P and NASDAQ would diverge. I don't think that happens again. I think the S&P is NASDAQ Junior now. But we had the breakout of the VIX yesterday. Now you get the close above the 50-week moving average. MACD is coming to the center line. It's probably going to firm up right here. And again, you have something like what we had over here, where you get this February peak and you get the breakout of the bullish wedge, you get back above the 50, and you have these huge surges in volatility. Gave us a 21% on the decline on the S&P. I think you'll get a bigger drop. I think you're going back to the April low on the S&P, and I think you're going to drop 27 to 30% or so, and I think you're gonna see a big drop. We've closed above the 50 here. Bands are warning us something big is about to happen. The Dow turning off of the upper channel line here in the weekly time frame. You've got a Dow theory reversal signal showing up here. Again, something's about to happen big time. I think you're going to come back to these April lows, and I think you're going to completely collapse. You're watching for a reversal bar on the S&P, a potential divergence on the RSI. We'll see what it looks like by the close of the week. Do we get a topping tail? Do we get a reversal bar on the weekly chart? P weekly right here. There's massive divergence on the S&P, on the RSI, and the MACD down here. I think you're going to end up coming back down and giving it all back and drop about 29, 27% or something like that, maybe 30%, end up forming this head and shoulders pattern on the S&P 500. We get down here to January, December, and maybe the angle of descent changes slightly going into deeper into January. You drop for 10 or 14 weeks or so. I think the Fed panics, and again, that's where I think we get the massive rally back up for the right shoulder towards 61 or 6,200. The S&P 500, after dropping back down here towards 4,800, I think that's where you're going to get your shoulders when the Fed does the jumbo cuts and begins to panic. And I think it's going to set this pattern up. Please support the channel with the link directly below. The link, it'll take you to a secured site. You can donate any amount you want. Thank you for your consideration for that. Well, we just had the rate cut. We just had the rate cut and Powell's press conference. We're getting a lot of earnings this week. And right now in after hours, we've got Meta and we've got Microsoft and we've got Alphabet. So that's what's happening right now in after hours. Tomorrow after the closing bell, we have Amazon and Apple and Coinbase. And we got big oil on Friday. And the Wall Street darlings now reporting with Microsoft and Alphabet right now, just after the Fed meeting, and then Amazon and Apple and Coinbase tomorrow after the closing bell. Microsoft beat on earnings. Meta beat on earnings, but the price is dropping in after hours, dropping 8% initially. And if we look at the story that just popped up, Meta shares dropped 9% now, despite earnings beat as the company takes a one-time tax charge. Alphabet reports tops 100 billion quarterly revenue, 102 billion opposed to 99 billion. Just a little bit here after the bell, we have after the closing bell and earnings being reported, we have Microsoft down 2.25%. We have Alphabet up 4.89% at the moment. And Meta, again, moments ago was just down 9%, now down 7.39% at the moment in after hours. Microsoft and Meta are down. Alphabet's up about just over 4%. And with those earnings in after hours, NASDAQ futures is up a little bit here. S&P futures are down a little bit. The Dow futures are down. Alphabet helping out NASDAQ a little bit there in after hours, getting a little bounce. Now, we got the release of the Fed minutes. Again, we had a rally, went up a little bit higher than yesterday, came back down towards a flat area. And then we got the release of the statement. We tried to rally with it. And then we had Powell come out saying that policy makers are divided on a December cut. And he said that a December rate cut is not a foregone conclusion. And the markets threw a fit, immediately selling off sharply, but then recovering towards the end of the session. The S&P ended up flat The Dow down 74 points, S&P down just over a quarter of a point. NASDAQ up 130, up about 0.5%, and the Russell down 0.85%. NASDAQ's being helped right now, NASDAQ 100, by NVIDIA, and we have 4 gaps in a row now above the upper Bollinger Band, and NVIDIA is getting an interesting candle. I'll show you. Now, I told you yesterday that I thought Powell would tank markets and rattle markets, and he did, but he did it for a completely different reason. Now, Powell is interesting in that I thought he was starting to realize that we were moving into recession. Based on his comments at Jackson Hole, he was very concerned about the economy. Just prior to that, he was too, a little bit. Then he did interview, and he expressed more concerns about the economy. I thought Powell was going to show concerns, and the Fed was going to show concerns about the economy, and we would see the markets rattled on that. Completely different thing rattled the markets, and that is the Fed now having lowered twice in September and December, September and October here, saying, well, maybe we don't need to cut. We'll just wait and see. Maybe we'll just wait and see, and maybe we don't need to cut in December. I want to tell you, they're going to cut in December. They're going to do a quarter-point cut. Market's throwing a fit, and you'll likely begin to see a post-Fed sell-off now. Market throwing a fit. The October rate cut already priced in, and the market's been pricing in a December cut. It's going to recalculate that. I'm telling you, we're going to get a cut, and then you're going to get probably in January, maybe late December, but probably January. I think the meeting is December 10th, but either late December or on into January somewhere, you're probably going to get jumbo cuts, and I think it's going to be January. We have an emergency meeting ahead of the January meeting at the end of the month. If we start selling off now for the next 10 to 14 weeks or so, I told you I thought there's a very good chance we peak this week. If we do, we could sell off, and then the Fed, if we sharply sell off, the Fed will panic. We're going to get these cuts. This is a bunch of nonsense. Powell completely doing a 180. This is fascinating. Powell completely doing a 180 on the economy. Done the rate cuts, so that's going to support the labor market. Powell said by cutting rates and supporting the labor market, it will prevent the labor market from getting worse. We're already seeing deterioration in the labor market. It's clear. Jobs from 2023 and 2024, we had fewer jobs created. Fewer in 2025. We're seeing the erosion in the labor market. Clearly, there's deterioration in the last few reports that we've gotten. We saw a negative number in June. And again, you're going to see more negative numbers. When this happened in 2007, it was associated with the top in 2007. You started getting the smaller negative jobs number, like we just got the negative 13,000 for June. You got a bigger number. That was it. It was over. All the numbers in 2008, Fed told us there was nothing to worry about. All those numbers were negative numbers, and we saw hundreds of thousands of jobs lost, and the unemployment rate soar in 2008. The Fed did emergency cuts in January, started in September. They did an October cut, they did a December cut, and then the market tanked. And each cut was associated with the sell-off. That's why I think this cut is going to be associated with the sell-off. And I think Powell just gave it to us that it's not a foregone conclusion that we're going to cut in December. They're going to cut in December. I'm telling you, they're going to cut in December. They're going to cut by a quarter. And then by January, they are going to panic because you're going to see the market tank. You're going to see Bitcoin tank. You're going to go back to these April lows or maybe beyond them. And you're going to see the Fed begin to panic. Powell, fascinating. And let me just say this about the labor market real fast. I posted this on social media today. During Powell's press conference, Powell just said we do not see weakness in the labor market accelerating. The Fed thinks that they can micromanage the economy, do 2 cuts, and then that fixes everything. Powell's doing a complete 180 right now on the concern that he had at Jackson Hole, the concern that he had recently in his interview. And he said the job market is making a significant. We do not see weakness in the labor market, or that the job market is making a significant deterioration. So again, completely doing a 180. I thought Powell might have seen the light that the recession is coming, but the Fed is going to do what they normally do and completely be blindsided by it. Powell said that cutting rates is supporting the labor market, and it's going to prevent the labor market from getting worse. And I put up here Powell's position on a December rate cut. It's transitory. That's what they said about inflation. Again, back in December, Powell's telling us that, again, it's clear we've avoided a recession. That's an exact quote. The Fed always does this right before a recession starts, as they try to tell us that there's going to be no recession and we're going to have their soft landing fairy tale, and it never happens. The soft landing is a fairy tale. It's Kool-Aid for herd and to make the experts sound like they're sophisticated. It doesn't exist. It's made up. The Fed can feel like they are important. Time they've claimed we had a soft landing, we've been still in an economic expansion. The rate-raising campaign continued later, being part of the larger cycle. Again, I was shocked that Powell has now done a 180. And, well, we've done 2 cuts. Now we're protected, and there's going to be no more deterioration in the labor market. Talk about waiting and seeing if the GDP is real or not. And before he talked about rate cuts supporting the labor market so that it would not continue to worsen. Before that, he did say they're going to wait on the December cut. They're going to wait and see if there are any more downside risks to the labor market and if the economic growth was real. So he did say that, and then later talked about the 2 rate cuts and the rate cuts they previously have done, hoarding the labor market from getting worse. So earlier in the press conference, expressed a little doubt. See him express more doubt in January because, again, we're moving into recession that will likely hit by December or January. I think at the very latest in the first quarter, but I think it's going to hit in December or January. Really, when the Fed starts their rate-cutting campaign, a few months later, the market starts, or the recession starts showing up. The huge red flags are the Fed is doing their rate-cutting campaign. Today, they ended quantitative tightening. That will end. They didn't end it today, but they announced the end of it December 1st. So this is telling us, hey, we're moving towards a recession. Herd believes, the Fed's going to end quantitative tightening. That means quantitative easing is now starting up, and that's not what that means. It means they're ending quantitative tightening, the downsizing of their balance sheet. They're not starting up quantitative easing all over the internet. We're going to get all the quantitative easing. When the markets, when Bitcoin and the stock market, when we see markets start collapsing, Fed's not going to start quantitative easing is what they're going to do. Before that, eventually they will, later in the recession they will, is what they're going to do is start doing jumbo cuts, which they should have already been doing. Before inflation was soaring, they left rates too low for too long and told us inflation was transitory. And now they've left rates too high for too long. Back inflation was soaring to 9%. The Fed was clueless, and they said, inflation's transitory. Started cutting right as it was heading to 9% there. They were dovish when they should have been hawkish. Now they're hawkish and leaving rates elevated when they should be dovish. They should be slashing rates because we're about to move into a recession, but the Fed does not believe the recession indicators. There was hope for Powell. I thought at Jackson Hole, some of his comments afterwards, I thought there was hope for Powell that maybe he was seeing the signs of recession. But again, the Fed just going back to what the Fed normally does, and they're going to be blindsided by it. They're completely oblivious to what is about to happen with the recession. Fed making the exact same monetary policy mistakes that they made in 2007 and at other times in history. They always do. Their policies always lead to negative outcomes, always. Fed thinks that they can prevent a recession when it's their policies that usually cause a recession. The Great Depression, it wasn't this crash of the stock market that caused it. It was the Fed that caused the Great Depression. Go read Milton Friedman's work on this. It shows how the Fed caused the Great Depression. He's a brilliant economist, or I should say was a brilliant economist. The S&P ended down less than half a point lower. This divergence yesterday. Today's session, we gapped higher, and I told you to be watching for a top this week. We're at major resistance in the weekly time frame. In the 5-minute chart, we gapped higher. You can see what happened, and then we began to sell off. We went back down, tried to bounce, got a lower high, and right here is where Powell started showing doubt a December rate cut, or expressing that it's not a foregone conclusion, as he said, the markets immediately threw a fit, dropping below the 200. Now rallying back up to the 50 period moving average here in the 5-minute time frame. So we'll see if the 50 and the 200 get a cross, and will we take out today's low? Popping higher, this very well could be a gap and trap. Now go forward with a post-Fed sell-off, which is very, very common. We had some volatility with Powell. I told you Powell would rattle the markets. He rattled them for a different reason than I thought. I thought he would show concern about the economy and show real concern about the government shutdown. Well, he did express a little bit of concern about the government shutdown, but he dismissed it. Oh, yeah, we're going to see a little bit of the government shutdown show up in the economic data, but then it's just going to go away and everything once the government reopens. And again, I think the government shutdown is putting the final nail in the coffin here for the economy. Still had the recession, but because of that, the government shutdown is going to get us there faster. As I said, I think it's going to go on longer than everybody thinks. I think it's going to go 5, 6 weeks, maybe 8 weeks, possibly even longer, but I think probably 5, 6 to 8 weeks, something in there. The longest government shutdown back in 2018 was 35 days. Start seeing the stock market begin to tank. It might encourage the politicians to keep the government closed down longer. I believe it's being purposely done to try to create a recession or cause a recession. I think it's the final nail in the coffin for the economy. The diversions here yesterday still went a little bit higher to complete it. As you can see, we gapped higher and then we turned down, and we broke down from this rising wedge here on the 15-minute chart. And hang on, my trend line moved on me. I love these charts. I love this charting program, but sometimes when you hit save, the trend lines move on you. It drives me nuts. Anyways, we have this little rising wedge. We broke down from that. We're taking out the 50 period here on the 15-minute chart. I'll be watching if we start moving down towards horizontal support, filling these gaps now. We've had multiple gaps. Today's high gave us a little divergence here on the 60-minute chart. One didn't have to show up, but it could, and we pushed higher. We got a little tiny divergence today, our extreme reading, and then we turned down again, breaking down from a rising wedge. I've taken it back further here on the 60-minute chart. I think you've got a head and shoulders here. I told you you might get a double top, or again, if when signals turn back to bullish Friday, they turned back to bullish the previous Monday, and then several of them on Friday with the breakout above the previous high on the 9th. I told you if those signals stay bullish for a few days, we still might try to go higher, but I told you to be watching for a top this week, slamming into major resistance. You probably got a pretty good shot of a head and shoulders here. We had a smaller one over here, negated with the breakout above the previous high. So you had a possible head and shoulders. You now have a larger one in play if we start making our way back down to 65.50, which was our low when Trump rattled the markets with the tariffs. And by the way, I want to say with the announcement of potential tariffs on China, 100% increase, which would put it at 157%. They've got this framework. Just real fast, we've got this meeting between Trump and Xi Jinping here in South Korea. Right now, as I'm making the video, it's the wee hours of the morning in South Korea. And so, again, this is supposed to happen later on. I'm not sure of what time they're supposed to meet, but again, this is coming. Let me just say this. They've got this framework. You've got the 100% tariffs. Treasury Secretary saying, hey, we got this framework. We've probably avoided that. I don't know all the details of this potential deal and the framework, but again, from what I've seen, man, I sure hope they hold out for a better deal. Posted this on X today on social media here about the trade deal with China. I said, don't be surprised if the U.S. holds out for a better deal. Now, markets are betting on a trade deal with China this week, that it'll happen this week, and they could be let down. I don't know that we get the 100% tariffs. Maybe there's a different amount of tariffs implied. We get a short-term deal and then continue on with more negotiations. That's probably going to be that they're going to continue on with more negotiations. I just put on here some of my thoughts, and I said, don't be sure that the U.S. cements a deal with China this week. I'm starting to think that the Trump administration holds out for a better deal than the framework and some of the details that have been announced in the media about the deal. I put, in my opinion, knowing China's long history of broken promises, lying, and cheating, which they do on every single deal they make, This is the Communist Party here. Their word is no good. Personally, I think they should just put the tariffs on and be done with it. That way China can't cheat. The deal with China back in 2018, and they didn't keep it. It was just paper. It was nothing. They lied. But knowing China's history of lying and cheating and broken promises, that I hope President Trump will pause, consider that, because the U.S. has a huge amount of leverage. China needs the U.S. consumer. They need access to the U.S. market. To the 60-minute chart, I'll be watching to see, does this peak right here hold, or do we form a larger divergence? We're climbing into major resistance, and Nvidia and the NASDAQ are overthrowing their trend lines in the weekly time frame. We'll see what kind of weekly bar we get by the end of the week. We're watching, do we head back towards 65.50 and end up filling all these gaps and getting a sharp decline? What's really interesting is the daily candles that form. We got a hanging man candlestick on the S&P 500 closing just slightly below the upper Bollinger Band. I told you to be watching for that close. Oftentimes when you close below the upper band, you'll either correct and push back up to it again, or you'll reverse. Here we turned off the upper band, and then we still went up to it, and then we reversed. And again, possible head and shoulders here, but you got a hanging man. If we close tomorrow below today's low, then you'll have a confirmation of the hanging man. Yesterday, we got that candle of indecision. Told you we got a good shot of a top this week. I told you it might be yesterday, might be today with the Fed. I think you got a good shot of it because you're at major resistance. But NASDAQ and reversal bars today too, above the upper channel. The S&P is just slightly above it here. We'll see what it looks like by the end of the week. And in the monthly time frame, we're above the trend line in the monthly time frame. A better way to look at that might be the quarterly time frame over 3-month periods. Do we reverse off of that trend line with the quarterly bar? Because it's nearly 100-year-old channel. It is a 100-year-old channel because going into the 1920s. But again, get a hanging man here. You're below the upper band. We had the sell-off. We rebounded, and that gave us this hanging man candlestick on the S&P 500. Still have the multiple points of divergence developing. Here on NASDAQ, you got more of a doji-looking candlestick or a shaven type of a head-looking candlestick. Could be a hanging man with a small real body, but again, more qualifies as a shaven head or a doji-looking candlestick with the cross in the upper end. We opened and closed very similar, got a little black candlestick. Got a candle of indecision, but look at this. You have one gap here from Friday. You get one Monday, you get one Tuesday, and then you get one today. We went back and filled that gap today, but then you closed higher. And even with earnings season, we could still sell off on concerns of we're not going to have rate cuts anymore. Oh, no, we're going to have rate cuts. We're going to get more rate cuts than everybody thinks that we're going to get, because I'm telling you, by January, you'll likely have jumbo rate cuts. Latest in the first quarter, I don't think so. I don't think it takes that long. I think it's going to be by December or January. The market's going to start collapsing and the Fed is going to panic. And again, the clues are that the rate cuts have started in September. Now today we get the quantitative tightening being announced that it's going to end in December 1st. So this is a huge warning sign that the market is going to put in a top and begin to collapse, that the recession will soon start, and the Fed will be late, as they usually are, and panic and start doing jumbo cuts by January. I truly believe that's going to happen. Somebody tell me today, oh, no. I understand the rate cuts are bullish. Boatload of people that have never seen a bear market, never seen a recession associated with the bear market, something papered over with $5 or $6 trillion in stimulus and the Fed QE 2.0, which gave us all the inflation. You could sit here and try to blame supply chain disruptions. That's what gave us really initially the inflation. They can't do that again. The Fed will eventually do QE, but we're not going to see massive stimulus checks being passed out for fear of the inflation of 9% coming back on the CPI. Your hands are tied. We're going to have the recession. That what looks to be a reversal bar in what looks to be a doji or kind of a shaven head, kind of a candlestick. It's got a little tiny wick on top there, not much. Cousin of the hanging man, but it looks like a doji to me. You take your pick. Again, if we start coming down, you've got the potential head and shoulders here. And this is not going to end well. We have, look, 4 massive gaps above the upper Bollinger Band, okay? You're going to close likely back below it tomorrow. The S&P closed below it today just ever so slightly. NASDAQ did not. NASDAQ's probably going to close below this low tomorrow and confirm this doji looking candlestick and start coming back and filling these gaps and head back down towards the October 10th low. Look at NVIDIA's candle today. You've got a candle of a spinning top, but look at this topping tail on it, the upper boundary there. And again, you've got some serious gaps. You've got 1, 2, 3, 4 gaps, just like the NASDAQ, above the upper band. This is probably going to be a reversal bar. And again, if we start turning down, you got a possibility of an evening star reversal here, wide range bar, this bar right here. It's a doji. This is a spinning top. It'd be a evening doji star, and then you get a big ugly red bar. So if you start coming back down to fill these gaps, now we're overthrowing the upper channel in the weekly time frame. Watching, do we give it back and end up closing back below the channel before the week ends? If you get a big sell-off, you could do that. But a potential reversal bar here on NVIDIA in the daily time frame. NVIDIA still has this massive broadening formation. This is the long-term trend line, though. We still have this broadening formation, but we've overthrown this trend line right here. Do we end up closing below it before the week ends? Look at that. To get above it right here, and we couldn't close above it. We're getting this big move that's helped the NASDAQ, but again, both NASDAQ and NVIDIA are overthrowing their channels. Here you can see the long-term channel in the weekly time frame. Now, NVIDIA did this very same thing down here in 2015. Right there, a little bit too big there. Again, we had the start of the trend line there for the channel, and we slightly breached it and overthrew it, but then turned right back up. Do we see something like that here, slightly getting an overthrow move? Channel's played out very nicely, but you are overthrowing the channel right now. Break out of the channel, or is it going to be a reversal? Even if we close above the channel, to close above it and then get a follow through, do we end up seeing a sell-off that ends up closing back below this trend line or breaching it but then turning right off of it rather quickly? We did there in 2015 at the bottom with the higher low that's set up. Trend line I'm watching on NVIDIA. Again, the NASDAQ has a broadening formation just like NVIDIA, but it is also overthrowing the upper boundary of the broadening formation. If we include the shadows there, if you exclude it here and don't connect it to here, but just connect these levels, you still have a broadening formation and you're getting an overthrow, and that's not invalidating the pattern. But here I have a channel from these lows, including the shadow. Here, I've included the shadow here, and we're slightly overthrowing that peak on the NASDAQ 100 here with our log scaling. We're going to close. You can see we're clearly overthrowing that trend line a little bit, and it's what I'm going to be watching for in the weekly time frame. If the doji-looking candlestick we got on the daily chart is confirmed tomorrow, and we start selling off to move back to fill the weekly gap higher from Monday, if we start coming back and filling some of these gaps, do we close below that trend line, that red trend line, rising trend line, this one right here, closing back below the upper channel line, and again, end up getting some kind of reversal bar here in the weekly time frame. Now, in the daily time frame, we just got those 9 counts. 9 counts, sometimes you turn immediately, other times you go a little bit higher. The 9 counts previously in the uptrend have led to pullbacks or sideways moves. This one, as we're going into major resistance, you got a good shot that it's going to lead to a reversal. I think you're coming back down to the April low. I think you have a broadening formation here. Maybe it evolves into a head and shoulders. I think the S&P is setting up a head and shoulders. I think you're going to get a bigger crash than what we had over here to kick off the bear market. And I think that you're going to crash in the next couple of months here into January, maybe late December or on into January somewhere. And then I think the Fed is going to panic. And that's when I think you're going to get the emergency cuts out of the Fed. Could be, see a 34, 38% drop or something like that on the NASDAQ, 27, 28, 29%, 30% on the S&P 500. I think that we're there by January, maybe as soon as December, but probably January in the next 10 to 14 weeks. And then I think that's when the Fed panics. When I think you get your emergency cuts You have an emergency meeting. They'll do an emergency cut of half a percent or 0.75%, and then you'll get another one in January. Later in January, at the late January meeting, you'll get another 0.5% in all likelihood to whatever they started off with whatever they kick it off with. Don't ignore that we might get more news about the regional banks. We're seeing problems with regional banking sector, with the stock market, the regional bank stocks. Posted on, again, X today that are hearing more about that, those bad loans. Later, that's likely going to be the black swan event. Later in the recession, we're going to have another banking crisis. So I'll be watching. Do we close below this trend line? Right now, we're above it here in the weekly time frame. But a really nice looking channel here on the NASDAQ 100. Nice looking channel on NVIDIA too. This one goes back to the 2018 low, and all I've done is connected the 2018 low and the 2020 low, drawn a parallel boundary from the 2021 high, and that's pointing up to where we're at right now. We're just overthrowing that trend line. I'm including the shadow here, and I'm including the shadows over here. And here's that 2021 high. You can see I'm including that shadow. It might be slightly higher than where I'm at. I have a thicker line here, so maybe I overlapped it a little bit. But you can see I'm trying to get that upper shadow in there. Let me thin it out and see if I've got it. Well, pretty close. I might be off just a fraction there, but fairly close right in there. I'll play with it and try to get it. That looks about right there. But that's the upper channel that's parallel. So that's the trend line I'm trying to use here. And yeah, we're still overthrowing that. So we'll see if we close below it by the end of the week. Looking channel from the 2020 low on the S&P 500. And again, I've told you, again, I've had it to where I excluded the shadow here and included the shadow, just playing around with it. Here previously, I had it connecting to the shadow low here, the wick low there on the 2025 low. We moved above that channel. Connected from that low, you slammed into it on that October 9th high. We moved above it, so I've excluded it here and went back to connecting the 2020 low, excluding the shadow here, touching the 2023 low and excluding the shadow here. And now that's where we're at right now, and including the shadow over here in 2022. And again, I said yesterday, these channels are easier to draw after they finish because you can see the channel finished, and of them include the wicks, other ones don't. And so right here, I've got this parallel channel, and we're coming up there right now on the S&P. Bring it up close. You can see the S&P just slightly overthrew that trend line today at the highs. We slammed into it yesterday. I told you again, I think there's a good chance you're getting a top in the stock market this week. Started cutting before in 2007. Recession quickly followed. You're going to have the exact same thing happen here. And that's why I think you're going to have recession by December, January. I think the Fed is going to be doing jumbo cuts by January, and I think you're going to top around here. Now, here we're turning off of it. NASDAQ's still above it. Do they reverse off of this level? And this trend line, we're just slightly above this trend line right here from the 2023 low. Do we end up dropping below that and filling the gap or something before the week ends? Do we end up getting some kind of topping tail or reversal bar by the time we close the week out? I think there's a very good chance of that. You're at these major levels of resistance. Even though NASDAQ is slightly overthrowing it now, it may not be able to close above that level.